Ladies and gentlemen, welcome to today's episode on No, but Seriously, Let Me Explain. Hosted by the beautiful, intelligent Earth Angel Lala Davi. This podcast was designed to provide detailed business advice, next level resources, personal credit tips, and relatable relationship knowledge. Be sure to bookmark this page and subscribe because we wouldn't want you to miss any valuable content. And if you're struggling with poor credit, don't even worry about it. Just text Help My Credit to 507-400-3426. That's 507-400-3426. We have live agents standing by to cater to all your service requests. And now that that's out the way, let's make room for what the host has to say. Lala Davi, do your thing, girl.
What's up? What's up? What's up? Welcome to No, but Seriously, Let Me Explain, the phenomenal podcast series that will keep you fully engaged with all the tips and tricks that you would need in order to be successful while giving you lots and lots of flavor. I am your host, Lala Davi, and today we will be discussing the home buying process. Are you ready to make the decision to buy? No, but seriously, let me explain. Are you frustrated with constantly paying off your landlord's mortgage? Do you have an urgent need to get the fuck out your current situation? Well, this episode will be just for you. So listen up. At the moment, we are currently experiencing a seller's market, which could mean that as a buyer, your options will be limited for right now. That's just for now. The link between having good financial security and home ownership is especially important in today's inflation rise. But many people may not realize just how much owning a home contributes to your overall net worth. As Metro Atlanta and the surrounding counties continue to progress with economic development such as new businesses and, new residents coming in from around the world and new jobs opening up, new opportunities, the things they will tend to, continue to rise. We'll see a rise in the prices. Home ownership, it can be rewarding in different ways, especially when it's serving as a vital component with your financial stability, especially if you're looking to increase that financial stability by owning a home. It will be worthwhile to go. Buying a home, it may be one of the biggest financial decisions you could ever make. So before you take that plunge, you want to make sure that your finances are solid. What do I mean by that? I'm going to go through some things to help you to make sure everything is solid and in place so you're ready to rock. You want to first check your credit score. Your credit score, it should be at least a 620 or high enough as a single person if you're going to go through it single. It's a way to keep your mortgage rates lower if you have a good credit score. So a 720 or higher is great, but 620 is definitely where you want to make sure that you're within so you can at least obtain that FHA loan. If your credit score could use some work, hold off on buying a home and see what you can do to improve that score. You want to make sure that you're paying all your bills on time. And you want to make sure that you're keeping your credit card balances as low as possible. You want to keep your current credit cards open. Don't close them out at all. Closing a card, it will increase the portion of your available credit that you use, which can lower your score. When you've determined that you can afford the home that you're looking to buy, you can figure out pretty much what you want to save as far as your down payment. I recommend saving at least 7 to 10% of the total home value, even if the down payment is less than the total amount saved. while closing costs, they genuinely run from about 2% to 5% of the total of the loan. It will be wise to have some emergency funds just in case you have some type of unexpected repairs that may come up, or at closing, they may have calculated your final worksheet incorrectly, something that actually happened to me, and I had to come up with an additional $2,000. However, I was prepared for it, but you still want to make sure that you have enough cash cushion available. If this is your first home or you haven't owned a house in a while, you may also want to look into your state's first-time homebuyers program. There are many states that are currently offering financial help, including down payment assistance. Right now, Bank of America is currently giving out grants, $60,000 to home buyers during the 2022 until 2025. You must live in a low to moderate income producing area. You must have a 640 credit score minimum in order to qualify, and all applicants will receive $17,500 from grant funding from Bank of America. So this is just one of the examples of the funding programs that's currently available. There are many other programs that are currently available. We do have programs for the first responders. When I say first responders, I'm referring to those firefighters, the law enforcement officers, paramedics, emergency technicians, nurses, doctors. This incredible program will be made available to those individuals. We do also have financing options available for VA recipients who may be active duty military personnel or either in the reserves, purchasing their first home or looking to move into their next home. All loans will be subject to approval, including credit approval. Some restrictions may apply. Program details will not be available in all areas, and terms and conditions are subject to change without notice. Now, to prepare you for submitting your offers, you want to be prepared to submit any aggressive offers in order to win in today's market. And you want to make sure that your pre-approval is up to date. The pre-approval and the approval paperwork is heavy process. So you need to get ready. And by that, I mean uploading several documents. And here's a list of what you would need. So make sure you get a pen and write this down. You would definitely need your W-2 forms from the last 2 years, possibly more if you've changed employers. You will need pay stubs from the past 30 to 60 days. You will need proof of other sources of income, including documentation of any gifts or money received. You will need your federal income tax returns for the last 2 years. You would also need your recent bank statements. Usually it is 2, or 3 months that is typically needed. So just be prepared to submit 3 months bank statements. And you'll also need details on long-term debits, such as your cars or student loans that you may have, or any other outstanding loan that may currently show on your credit report. Once your mortgage application is complete, you will go through underwriting. And typically during this process, the lender will make sure that all final decisions on whether to give the loan to you will be made. So it's basically making sure that there's nothing about the details or anything in the deal that sounds tricky or risky. So that's all they're looking for during underwriting. The underwriters will include digging deep into your finances. So you may need to come up with some more documents if that is necessary. The lender will also look at the home that you've chosen via an appraisal report and request a title search if needed. The only time a title search is not required is when it is a new construction loan, which is my absolutely favorite. I purchased my first home and it was a new construction home loan. And I mean, it was everything for me. So let me tell you about that new home loan purchase and how you can absolutely prepare for it right now. When selecting a home, you want to make sure that you're selecting a home that fits your budget. The last thing you want to do is purchase a home that you have to spend all of your days working and all of your nights trying to make ends meet on a job just to maintain the mortgage. No, we're not doing that. Most builders will draw the line with first-time home buyers and a few buyers with a great price. And then every 3 to 4 homes that go under contract, they will typically gradually increase that price. So in most cases, you want to make sure that you're saving. Your mortgage payments will not start until your home is completed. So this will allow you to have some time to build up for extra savings for closing costs or give you that extra opportunity to save more money for a higher down payment. When I started my first build out, my new home loan construction project, I started October 2019. And I must say, I was completely excited about this project. I started with looking for land, a location to actually build on. I picked out the home that I actually love, that I knew I would actually love coming home to. And I made sure that it was within my budget. And I placed earnest payment is what they call it, which was $2,500 at the time. I put $2,500 down and they started my build out. However, it wasn't until the next year. It was the pandemic. I was a little bit confused as to if I wanted to continue on with this closing because of the pandemic and people were losing jobs and it was just a big headache. And I couldn't decide if that was something that I should do or not. So, of course, I prayed about it. I meditated. I did everything I could possibly think of to help me determine if this was the right time to buy. For me, it was absolutely the right time to buy. I bought in a market that everyone felt as though it was crashing at the moment. So I was able to lock in at really great rates. However, when you are going to apply for a mortgage, it's important to know which type of loan to go for, which loan is perfect for you. The types of loans and the types of mortgages you use to buy a house can and will affect what you will need in order to qualify for that loan. So, when you're choosing the right home loan to boost your chances of approval, you may save $1,000 or so just choosing the right one in the long run. So I'm going to go over a few different loans so you can be fully comfortable with the one that is best for you. Conventional loans are mortgages that are not guaranteed by the federal government. They offer low down payments, but they have a more strict qualification term for them. The FHA loans, they tend to be a little bit easier to qualify for, and they are backed by the Federal Housing Administration. And these loans they do have requirements for the mortgage insurance. The VA loans come from the Department of Veteran Affairs, and therefore the active or former service members and their eligible spouses. These VA loans, they will allow you to make a housing purchase with no down payment. Then you have the jumbo loans. The jumbo loans are mortgages for houses that are more expensive than the standard lending limits. And these are usually larger down payment programs. I think they start at $20,000, but I will have to check on that. But I know they typically require a larger down payment, and you must have a higher credit score in order to get an approval for this type of loan. Then you have the renovation loans. These type of loans will allow you to wrap up the cost of your home improvements into the total amount of the home, especially if the mortgage rates are low. This can be done as a way to borrow more money for repairs while paying less interest than what you would have with another home improvement loan, such as a personal loan. You will also have the options when it comes to the mortgage term. Most buyers opt for a 30-year fixed mortgage rate, which can be paid off in 30 years and has interest rates that stays the same. On other hand, you can opt in for a 15-year loan, and that typically has a lower interest rate than the 30-year. But keep in mind, the mortgage payments will be a lot larger than the 30-year. For anyone that is looking to purchase a older home or home that's already on the market and you wish to negotiate with the seller, you may be able to save money by asking the seller to pay for repairs in advance or lower the cost to cover the repairs that you would have to make later. You may also ask the seller to pay some of the closing costs, but keep in mind that lenders may limit the portion of the closing costs that the seller may pay. Your negotiating power will depend on the local market, and right now it is tougher to drive those type of bargains at this moment. However, when there are more buyers than homes for sale, then you may want to work with your real estate agent to understand which local market and which strategy will be best for you. When you are under contract, it's critical that you don't make any extreme purchases, whether it's being financed or not. So I want to go over some things that you should absolutely not do when you're under contract. The first thing is do not change jobs. Do not become self-employed or quit your job. Secondly, do not make those large purchases at all. Third, do not fall behind on any payments. Fourth, do not spend any money that is set aside for your closing costs. Fifth thing, check with your loan officer before making any large deposits. You may be required to provide additional documentation about the origin and the nature of that deposit. So definitely watch out for that. You want to make sure that you take vacations after you've closed on your house and you have your keys in hand. Don't take a vacation right now in the middle of closing on your new home. Last week, the Feds raised the interest rates by another 0.75 interest points, which can have a lot of people absolutely worrying about this increase. But I'm here to let you know there is no need to worry because I may have a solution and a strategy that you can use as well. Listen up. You may come into the market at rates of 5.5%, not really wanting to pay that much. And there's an alternative way to maneuvering around those high interest rates right now. you can obtain something that is called an ARM. This stands for an adjustable rate mortgage. You can do this if you're 100% sure that you can pay the loan. An adjustable rate mortgage, it will typically start with the fixed rate for a set period of time, and then that rate will adjust at set intervals. Typically, ARMs, they come in different options, and you can set them for fixed rates as far as a set of 3, 5, 7, or even 10 years. After this initial fixed period, that rate will adjust in a 6-month interval typically with certain market conditions. Some of the things that you would need in order to qualify for an ARM loan is a credit score of 620 or higher, down payment or equity if you're refinancing your home. You would need proof of income, typically 1 to 2 months of pay stubs for that. You would need at least 1 year of your W-2s, possibly additional financial verification. If you're self-employed or anything like that, you would need 2 years tax returns or information to show that self-employment. If you're unsure if an ARM is right for you, then just ask yourself a few questions to determine that answer. The first question I would ask myself is, how long do I plan to stay in this home? If you plan to stay for a couple years, then yes, an ARM might be the right choice for you. However, if you can afford the mortgage, if it goes up or down, or if it increases, whatever, you can go ahead and select an ARM. The next question I would ask is, how frequently does the ARM rates adjust? And where do you see yourself at the end of the introduction period, the 3 to 10 year period? For example, if you're in a military and you know you're going to be traveling and relocating every few years or so, you definitely would want to consider doing an ARM. And that's just in my opinion. I'm no expert and I cannot tell you what to do. So you definitely should go based off of your comfort levels. We're going to go to the phones now and take a live call. In all seriousness, which do you prefer? To have a move-in ready home, but it doesn't have all the features that you want? Or would you prefer to have a new construction home that is fully customized to your desires?
Yeah, you already know it's a no-brainer. I want my house built from the ground up. I want my house customized, designed to my desires. I want my certain doors in it. I want my certain toilet. I want me to be the first to ever do anything in my home. I mean, this is my dream home. This is the house that I wanted all my life. Why would I want to take seconds from anybody else? The goal is to get your dream home, the home that you want.
Are you the type of person who doesn't want to build anything or put in any work if necessary?
Oh, I'm the type to put in all the work. You know what I'm saying? I'm the type to do whatever I have to do in order to get it done. I'm far from the lazy type. I mean, if it takes for me to put on a suit or for me to put a hammer in my hand, whatever it takes, I'm the hard worker. Call me Mr. Hard Worker. I love to work hard. Got to put the work in. If a man don't work, he don't eat. If he don't grind, he don't shine. I mean, any man should want to put the hard work in. I mean, it feels better that way. I don't want nothing easy. I don't want it easy.
Definitely. That sounds great. And I thank you so much for calling in. Are you ready to start challenging your own beliefs? Now is the time to start getting your credit up to par. It's time to start building up your current savings balance and having your action plans written out. Invest in yourself first, then spend what's left over creating that ideal look of your dreams. We have come to a very short commercial break paid for by our lovely sponsors, so don't go anywhere. We will be back after this message.
Yeah, what up, ATL? Look, you ballin', you bad and bougie with bad credit. That's most of y'all. But look, man, that's why y'all need to call my people at Exchange Credit Repair. That's right, Exchange Credit Repair will help you squad them inquiries, get rid of them collections and bankruptcy. They'll even take child support off. I didn't even know they put child support on credit. Woo-wee! And boost your credit score. Let's get that credit score where you want so you can go get what you want. And if you mention Streets 945, you get a 35% discount. So call my people right now at 678-420-5553, 678-420-5553, or visit my people at exchangecreditrepair.info. Exchange Credit Repair is a credit counseling business with experienced credit repair experts standing by to assist you right now. When I made this deal with them, I said, look here, you ain't got to pay me for the commercial. Just put my credit score where I want so I can go get what I want. When I went to them, they treated me like family. My privacy was all the way respected. They quick to fight for a client's right with the Bureau of Credit, creditors, and debt collectors. Conveniently located at 1 West Court Square in Decatur. Tell them Shout sent you.
What are you currently doing in your everyday life to achieve your goals? Setting goals is the first step to turning your dreams into a reality. Your work is going to fill a large part of your life, and the only way to be truly satisfied with what you do is to believe that you're doing great work. And the only way to do great work is to do what you love. If you haven't found it yet, keep looking. Do not settle. As all matters of the heart, you will know when you found your dream home. As we come to the end of the show, I would like to send you much love and give a big thanks for tuning into No, But Seriously, Let Me Explain. I am your host, Lala Davi. Be sure to come back next week as we will have more show for you. Until then, stay bold, beautiful, and brilliant. Love ya.